All right, hey, good afternoon, everyone. It is Monday, 1:30. Markets just closed here. Let's just jump right into it. This will be a short video. We had a lot of volatility on Friday. I think that had a lot to do with just market nervousness because of the government shutdown. And I don't think it had a whole lot to do with fundamentals. But basically, if you're going to say fundamentals were weak, it's because traders looked at demand numbers and they just said, oh man, it's weak. We just have, if yield is decent, we're going to have way too many bushels. We got to kill it on Monday, on Friday. And then today we saw a little piercing pattern, a little hook reversal. Definitely not enough to say, hey, this move down to the downside is finished. But with the divergence here that's forming, is definitely a sign of a bottom. Now this peak right here is at 1435, and this low is at 1282. So 1435 to 1282, right? Just do the math real quick. 1435 minus 1282, that's $1.53. Now this peak is 1410, and today's low is 1265. So $1.45. So we have near equality on this sell-off from July 24th down to August 8th, and then we have from this sell-off down to this one, we have about equality in here. So what does that mean? Well, if this is a wave 2, which if I put our wave indicator back on here, you'll see the 2. If this is in fact a wave 2, a lot of times an A, B, C correction, wave C and A will be proportionate, and so when we see that, it tells us that hey, this really might still be in a wave 2 position, and we could rip up out of here and higher, which is what we've been counting on for a while. And I guess it's just a way of saying hey, this is very much still in play given the proportionality here in what this looks like, which is overlapping and corrective. So beans, the yields nationwide, they continue to come in looking like we're going to be at 50 or below, which is less than what the USDA is showing. So you could still see that yield continuing to shrink as the combines move west and as the yield results start to come in. So I still think that we're in the right frame of mind here to be looking for higher markets in the soybean and corn market. And Friday's report really did nothing to change that at all. The USDA found a few bushels, but there's really nothing overly bearish about that report. And the crush margins are just so good on soybeans, the demand is not going to be weakening a whole lot from here. So if we have any type of weather issue or yield surprise here, or yield surprise in South America, then beans can really get rocking and rolling. But I don't think it's time to throw in the towel and say, hey, just price everything, run away from it, and be done. I think we need to be more patient and let the market do its thing. Remember, a day is not indicative of a trend. And today is not a bottom yet. We need to see some follow through. I'd like to see Friday's high taken out at 1303, and really I'd like to see 1317, 1320, kind of this area right in here give way before we can say that we have much confidence in a higher move. But one day at a time, and today we are looking for follow through above today's high first and foremost, and then we'll see what kind of news develops. Now corn had a stronger day than beans, taking back everything that it gave up on Friday. It was unable to take out the high on Friday, and it was unable to take out the close from Thursday, which was at 489. So it didn't quite do enough to be real definitive, but nevertheless, it was a nice strong move today in corn. I think what's going on there is demand is not as bad as what people are saying it is. Domestically, demand is on fire. We have low river levels, and everyone says, well, that's so bearish because you have to back basis up. But that's the job of basis, is to move bushels around. It's not really a flat price issue. It's just a temporary, where do we put the bushels before we can move. So I don't think it's a sign of demand weakness as much as maybe some of the commentators that are out there are talking about. because if demand is strong here, why wouldn't it be strong in other places, right? Oil's high everywhere, ethanol margins are good everywhere, and demand is on the rise for corn as a biofuel and for um, food in general. You know, a note on biofuels: if you look at crude oil inventories continue to contract, and that is different than the strategic reserve. The reserve is there to boost our inventories that are at like Cushing and other terminals. So now we have a perfect storm where our inventories are light at our refineries, they're light in our midstream, and they're light in our strategic reserves. So we don't really have any way to refill the pipeline because our government emptied it. And the market has drained it anyway because demand has been really good. So credit is available. You've got lots of reasons to think that, my gosh, this market might top and go over, but the consumer's not slowing down. You know, we were out in Omaha this weekend, and it was packed. It was packed full of 20-somethings just spending money like crazy, and it's amazing to me that can happen at these gas prices, at these food prices and everything else. So this economy is not dying. It's not in trouble. And even though it probably should be, it makes no sense to me why we can live in the deficit that we are. But we continue to. And as long as we keep doing that with a stronger and stronger dollar, then we're going to see inflation continue to roar. And so once the traders decide to push that back in, you know, corn is going to explode because the demand for biofuels has never been more important and never higher based on all of these different pieces that are pulling together. So, you know, between this day here, which was August 2nd, through last week, the funds finished liquidating a long position and aggregated a 200,000 contract short position. I'm a little bit overselling the short, but it's almost 200,000 contracts that they sold, and they have absolutely nothing to show for it because they did it all between 5 and 590. They're almost to get completely blown out of this position, and I think it's because they're just wrong. They're underestimating corn's role in biofuels. They're underestimating global demand. I think they've turned a blind eye to what's really happening in China. And if you look at our crop size, it's not 173 or 4. It's below 170 because you got to get the apples to apples. So that they're wrong on supply, they're wrong on demand, and they're just kind of wrong in a macro picture that government has a hold of inflation. So I don't think that corn is weak. And once it does go, you know, it's kind of scary what may happen with soybeans. All right, that's a little bit of a soapbox, but we do read all this stuff. We read constantly to stay up to date on this on all of these major topics, and this market seems to be out of sync with reality and with inventory levels in other places. And whenever they're out of sync, when they do rebound, it happens really fast. Okay, wheat. Man, wheat just got pummeled last week. Here's Tuesday, Wednesday, Thursday, Friday. It just absolutely got annihilated. Today it tried to rally back, but all the way through this annihilation, all it did is make this divergence stronger and more palpable. That's all it did. So there's absolutely no reason to be on the sell side of wheat, in my opinion. If you're super nervous about it and can't stand the thought of it anymore, then buy some puts. But to me, that's a waste of money at this point because everything here is lined up and ready to go. I know I've been saying that all through this congestion area, and it looks kind of silly to hold it 80 cents more. But if anything, I'd be buying more. I'd be re-owning stuff because taking a shot back at a 750 move would pay out extremely, extremely well, especially out into March and May of next year. So if the government is, or if traders are off like we think they are on corn and beans, then wheat's going to snap as well. And I still think that this high back here is in reach and in play, given the overall fundamentals that we see. But you know, a day at a time. That's just my opinion. Price action hasn't confirmed that yet. It's given us no reason to think that it will whatsoever, except for these divergences in here, at this 13 in here, and that's, for me, that's plenty. That's all I need in order to to say, hey, we need to be patient and let this thing pop on up. Because again, a big short position established, and if traders do start to feel some pressure and they have to cover corn, they're going to cover wheat too, and that's going to get explosive. So we're looking higher and across the board in all these markets for lots and lots of reasons. And again, got to temper my bullishness. You still have to have puts on in place because your risk is down, especially in beans, because they haven't done enough here to say we're going higher, especially below this 83 low. We need to see that go away. We need to see this stuff up here get gone before we can be more confident. But the reality is, I think that's more likely than the alternative, which is to drop all the way, down into, 10 or 11 bucks or something like that. And corn, no difference there at all. I just don't see a world where corn rallies back to 550 or 6 based on some fundamental, and wheat drops below 6. That just seems to be a really far-fetched idea and something that we should bet against if we're looking for that to happen. All right, remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. As always, we're here to help analyze and review whatever position you're in and get you positioned the right way for what's best for your farm. Even if that is not really consistent with our opinion, that's fine. We're still here to help you out and make sure that you're comfortable there. Hope you guys have a great night. We'll talk to you again on Wednesday, unless tomorrow's action is wacky and we need to do another update video. But we're looking higher, and we'll be back with you then. Have a great day. See you later. Bye.